Hello everyone, John A.G. here. Welcome back to my channel, Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, real market updates that everyone cannot tell you. So please subscribe to this channel and love you all of my subscribers for your support. And please watch this video till the very end because YouTube will not push my videos to more people. The algorithms do not want you to hear what we are about to discuss today. They prefer the noise. They prefer you divided, confused, and operating out of fear. But today, we cut through that fear. We are going to look at the cold, hard, unvarnished reality of the global economy. We are standing on the precipice of the most monumental transfer of wealth in modern human history. And the silver stackers, the very people who have prepared the most for this exact moment, the people who have seen the writing on the wall for years, are currently falling into a psychological trap that has been set meticulously by institutional wealth. Listen to me very carefully. If you hold physical silver, or if you are even slightly considering exchanging your rapidly decaying fiat currency for this critical world-building monetary metal, you need to hear this. If you remember only one thing from this broadcast, let it be the fact that the market is a machine designed to transfer assets from the impatient to the patient. Let us travel back just a few short months. I want you to remember January 2026. Do you remember the feeling in the air? Do you remember the electricity? After years of fighting through the grueling, mind-numbing manipulation of the paper derivative markets, silver did something the mainstream financial press said was mathematically impossible. It broke its invisible chains. Driven by an unprecedented convergence of industrial panic, safe haven demand, and an outright global liquidity squeeze, silver prices rocketed past $100 per ounce. We watched in absolute awe as it hit a nominal all-time high of $121.64 on January 29th. The euphoria in the community was palpable. Suddenly, everyone wanted to be a silver stacker. The mainstream media networks, which had completely ignored or mocked the metal for years, were suddenly running breathless headline after headline about the great silver squeeze of 2026. Every financial pundit in a suit was suddenly a precious metals expert. But then, as it always does when retail investors rush the gates, the hammer fell. Today, as I record this on May 30th, 2026, we are looking at a market that has pulled back by roughly 34%. We are hovering in the $75 to $85 range. The media is silent. The pundits have moved on to the next shiny digital token or tech stock. And what is happening in the physical community? I am reading your comments. I am seeing the sentiment on social media. I am hearing the exhaustion in the voices of people who have held the line for decades. People are demoralized. They are terrified. They are asking me, John, was January just a fluke? Did I miss the top? Was the squeeze a lie? Should I sell my stack, cut my losses, and move my capital back into the stock market? Here is the dark secret Wall Street prays you never figure out. This demoralization is not an accident. This is exactly what the institutions want you to feel. They are relying on your human emotion, on the sheer grinding exhaustion of the everyday retail investor to shake the physical metal out of your hands and transfer it into their vaults. While retail investors are capitulating, terrified by what is actually a perfectly standard, historically normal technical pullback after a massive 144% annual gain in 2025, the smart money is quietly, ruthlessly orchestrating the critical move that most stackers are completely blind to. They are absorbing the physical float. They are using the paper market to crash the price, creating a wave of panic so they can buy the physical metal at a severe discount. Right now, you are being bombarded with coordinated hit pieces from major financial institutions. You will read lengthy, complex reports from massive multinational banks warning that silver faces severe industrial demand challenges. They will tell you that the higher prices we saw in January are heavily incentivizing solar panel manufacturers to use less silver. They will publish charts claiming that the supply deficit is shrinking and that a massive market-crushing surplus is right around the corner. Let me be perfectly, undeniably clear with you. This is a mathematical illusion. It is a fabricated narrative designed to separate you from your wealth. We must urgently separate the paper narrative from the physical reality. The undeniable bedrock truth of the global silver market, a truth validated by the laws of physics and economics, is that we are currently living through the sixth consecutive year of a massive structural supply deficit. This is not a temporary cyclical dip caused by a minor supply chain hiccup. This is a structural breaking point in the Earth's crust. Let us look at the raw, unfiltered data, compiled not by YouTube pundits or social media influencers, but by the Silver Institute and independent, globally recognized commodities research firms. Year: the global silver market balance net result, 2021. structural shortfall deficit of approximately 50 million ounces. 2022, structural shortfall deficit of approximately 253 million ounces. 2023, structural shortfall deficit of approximately 194 million ounces. 2024, structural shortfall deficit of approximately 176 million ounces. 2025, structural shortfall deficit of approximately 40.3 million ounces. 2026, estimated structural shortfall deficit of approximately 46.3 million ounces. I want you to really look at those numbers. Pause the video if you have to. Absorb what they actually mean in the real world. Since the year 2021, human civilization has consumed roughly 762 million ounces more than it has managed to pull out of the ground or recycle from scrap. Think about the sheer magnitude of that number. 762 million ounces. Where did that massive volume of metal come from? It did not materialize out of thin air. It came out of above-ground, free-floating historical stockpiles. It was systematically drained from the supposedly impenetrable vaults of the London Bullion Market Association and the COMEX in New York. The financial media desperately wants you to focus on the fact that the 2025 deficit of 40.3 million ounces was, quote, smaller than the massive deficit in 2024. They want you to believe the crisis is averting itself, that the system is healing. But think about this in human, tangible terms. Imagine a massive reservoir providing drinking water to a sprawling, thirsty metropolis. For 5 consecutive years, the city has pumped out millions of gallons more than the rain has replenished. The water line on the concrete dam is dropping lower and lower every single month. If, in year 6, the city drains slightly less water than the year before, is the drought suddenly over? Does the city have a surplus of water? Absolutely not. The water level in the reservoir is still dropping. It is lower today than it has been in modern recorded history. A smaller deficit is still a deficit. It does not magically put 1 single ounce of silver back into the London vaults. The drain continues, day after day, week after week. At this point, a rational person might be asking, John, if the price hit $120 in January and the world is running out of silver, why aren't the massive mining corporations simply pulling more silver out of the ground to meet the soaring demand? Isn't that how capitalism works? This brings us to the core economic reality of silver that the average Wall Street analyst, sitting in an air-conditioned office in Manhattan, fundamentally ignores. It is an economic concept called supply inelasticity. If the world suddenly demands twice as much wheat, farmers will quickly pivot and plant twice as much wheat the very next season. If the global price of crude oil skyrockets, drillers will rapidly uncap dormant wells and flood the market with supply. But silver does not work this way. Silver is an anomaly. Nearly 70% of all the silver mined on planet Earth is a byproduct. It is found scattered and mixed deep in the dirt alongside copper, zinc, lead, and gold. The massive multinational mining companies digging massive holes in the earth are not primarily looking for silver. They are looking for base metals to build roads, bridges, and infrastructure. If the price of silver goes to $100, $150, or even $200 an ounce, a copper mining giant operating in the mountains of South America is not going to spend billions of dollars to double its copper production just to extract a few extra ounces of byproduct silver. The global supply of silver is effectively blind and deaf to the price of silver. It is tethered entirely to the global macroeconomic demand for copper and zinc. And what about the primary silver mines? The operations that actually focus entirely on extracting the white metal? They are in a state of quiet, desperate crisis. In Mexico and Peru, the 2 undisputed, historically dominant, largest silver-producing nations on the planet, the industry is fighting a brutal, losing battle against nature itself. The incredibly rich, high-grade, near-surface ore deposits that built the massive global silver boom of the 19th and 20th centuries have been entirely depleted. They are gone. Today, miners are being forced to dig infinitely deeper into the earth, operating in harsher, more dangerous environments, spending vastly more diesel fuel and electricity just to process lower-grade ore. They are moving mountains of dirt to extract a handful of silver. Even with the massive price jump we saw in early 2026, global mined silver supply rose a completely pathetic, statistically insignificant 3% in 2025 to roughly 846 million ounces. You cannot simply snap your fingers or print a piece of paper and create a new silver mine. It takes 10 to 15 arduous years of geological exploration, navigating bureaucratic permitting, conducting environmental studies, and deploying massive amounts of capital before a single ounce of refined silver leaves a new mine. The global supply pipeline is severely constrained. It is fundamentally broken. The Earth is simply not giving up her historical treasure as easily or as cheaply as she used to. Now that we deeply understand that the supply side is crippled and inelastic, we must turn our attention to the demand side of this equation. Silver is living a deeply complex double life. It is the most schizophrenic, misunderstood asset on the planet. It is simultaneously a hypercritical industrial commodity and a Tier 1 historically proven monetary safe haven. Right now, in 2026, two massive, unstoppable macroeconomic forces are violently colliding, pulling the physical silver market apart at the seams. Force number one is the global electrification and artificial intelligence boom. The mainstream narrative aggressively claims that high silver prices will force solar panel manufacturers to thrift or find cheaper alternatives. And yes, on a micro per panel basis, engineers are desperately trying to use less silver paste. But the absolute macro volume of global solar installations is exploding at an exponential rate, completely wiping out any minuscule savings achieved by thrifting. But solar is just the beginning. Look at the meteoric rise of artificial intelligence data centers. AI is the great industrial devourer of the 2020s. These massive, multi-billion-dollar computing facilities, processing trillions of calculations per second, run incredibly hot and require staggering, almost incomprehensible amounts of electrical power. We must remember basic chemistry and physics. Silver is the most thermally and electrically conductive element on the periodic table. It is biologically and chemically impossible to replace silver in high-end, zero-fail applications. When you are building AI power management systems, deploying global 5G infrastructure, constructing thousands of electric vehicle charging networks, or manufacturing precision-guided military defense systems, you cannot use copper as a substitute. Copper degrades, copper oxidizes, silver does not. Industrial fabrication demand has fundamentally, irrevocably changed. Silver is no longer just your grandmother's silverware or the coins jingling in your grandfather's pocket. It is the literal physical blood running through the veins of the 21st century digital and military economy. Force number two is the great global geopolitical fracture. While the massive technology industry completely eats the available commercial silver supply, the sovereign nations of the world are executing a quiet, methodical rebellion against the Western financial debt-based system. Look closely at what happened in late 2025 and early 2026. We witnessed a completely unprecedented historical event. A massive, terrifying liquidity squeeze developed as physical metal was rapidly, desperately shuffled between the vaults of the COMEX in the United States and the LBMA in London. Why did this happen? Because the physical paper market was literally breaking under the immense strain of Eastern physical demand. India, China, and the broader, rapidly expanding BRICS economic bloc have recognized a fundamental, inescapable truth that Western populations have forgotten. Paper wealth is a liability. Physical commodities are true sovereignty. We saw Indian consumers and industrial titans import staggering, record-breaking amounts of physical silver, forcing transport planes to fly raw metal out of London at breakneck speeds just to satisfy the demand. The lease rates for silver, the actual tangible cost that massive financial institutions pay to borrow physical metal to cover their naked paper short positions, skyrocketed to historic highs. It was a glaring, flashing red warning siren that the free float of available, unencumbered silver in the Western world is dangerously, catastrophically low. The East is methodically draining the West. They are taking their surplus US dollars which are being inflated into oblivion by endless government spending, and they are exchanging them for physical, tangible ounces of gold and silver. They are trading paper for power. So what is the critical move? What is the fatal, tragic error that ordinary, hardworking silver stackers are making right now in May of 2026? They are letting the fabricated spot price dictate their physical conviction. When the price pulled back violently from $121 down to $80, many retail investors felt a deep sense of failure. They looked at their portfolios, felt the sharp sting of red numbers, and stopped stacking. Some even panicked and sold their physical metal back to the dealers, desperately hoping to buy back in at a lower price. Here is the brutal, honest, unavoidable truth that you must internalize. The spot price you see flashing on your screen is a derivative mirage. It is a completely artificial price determined by the algorithmic, high-frequency trading of infinite paper contracts, completely divorced from the terrifying physical scarcity occurring in the real world. The massive institutions know this. While retail investors are crying over a 30% technical correction, what do you think the central banks, the sovereign wealth funds, and the industrial manufacturing giants are doing? They are aggressively buying the physical dip. This is the critical move you are missing. You must completely transition your mindset from that of a frightened, speculative trader to that of a confident, sovereign accumulator. When a massive entity like Bank of America or Goldman Sachs releases a highly publicized report saying silver might face macroeconomic headwinds, you have to ask yourself a very simple legal question. Cui bono? Who benefits from that narrative? The answer is the very institutions that desperately need to accumulate physical metal to cover their massive underwater short positions. If they can mentally manipulate you into believing that silver is crashing back to $30, you will panic and hand them your physical wealth at a massive generational discount. If you are a true silver stacker, you cannot play their rigged game. You cannot outtrade a billion-dollar supercomputer running high-frequency algorithms on the COMEX floor. But there is one powerful, absolute thing you can do that terrifies the institutional paper managers to their core. You can take physical delivery and completely remove the metal from their fraudulent system. Every single ounce of physical silver you hold securely in your own hand is an ounce that cannot be rehypothecated. It is an ounce that cannot be lent out 10 times over to suppress the price. It is an ounce that cannot be printed by a corrupt central bank. Let us take a step back and look at this on a deeply human, emotional level. Why do we actually stack silver? Why do we endure the brutal volatility, the constant media gaslighting, the ridicule from mainstream investors, and the endless, agonizing waiting? We do it because we intimately understand the value of our own time and our own human labor. When you wake up every morning and work 40, 50, or 60 hours a week, you are literally trading your finite life energy for a currency. In the past, under a sound monetary system, that currency was a reliable, honest store of that energy. It allowed you to save for your family's future. But today, the fiat currencies of the world are leaking buckets. The purchasing power of the US dollar, the euro, the British pound, the yen, the rand, they are all trapped in a mathematical, inescapable death spiral. The rampant, devastating inflation we experienced in the early 2020s was not an accident. It was not a bug in the system, it was a deliberate feature. It is the absolute only way that highly indebted, fiscally irresponsible governments can default on their massive obligations without declaring outright catastrophic bankruptcy. They silently inflate the debt away by destroying the purchasing power of your life savings. Silver, standing fiercely alongside gold, is financial armor. When you convert your dying fiat currency into a heavy, tangible silver coin, you are freezing your human labor in time. You are storing your precious energy in a tangible, immutable element that has survived the rise and fall of every single fiat empire in the history of human civilization. When silver dropped from its peak earlier this year, I did not see a loss of value. I did not feel fear. I saw a rare, incredibly fleeting window of opportunity. I saw a market that had momentarily paused to catch its breath before the sheer, crushing weight of a 6-year structural deficit forces a violent, undeniable, true price discovery. The gold-to-silver ratio right now is sitting near an unsustainable level. Historically, in a fully unmanipulated, honest monetary system, it should sit much closer to 15-1, representing the exact geological ratio at which the two metals are pulled out of the Earth's crust. Gold has already made massive, historic, paradigm-shifting moves in recent years. Silver is the coiled spring. It is the indispensable industrial workhorse and the poor man's gold, waiting for the massive, tightly wound rubber band to snap. So, how do we navigate the treacherous waters of the rest of 2026? How do we protect our families and position ourselves on the right side of this historic wealth transfer? Here is the definitive playbook. First, you must absolutely disconnect from the daily ticker. Stop letting the fake paper price dictate your emotional state and your long-term strategy. Volatility is the mandatory price of admission in the precious metals market. Accept it, embrace it, and learn to use it to your advantage. Second, focus entirely on relentless accumulation, not perfect timing. Do not try to catch the absolute bottom of a rigged market. Dollar cost average into physical metal systematically. Whether silver is at $75, $85, or $95, in the grand, terrifying macroeconomic picture of global debt and fiat debasement, you are acquiring the single most undervalued physical asset on the planet. Third, keep your eyes permanently fixed on the vault drains, not the sensational media headlines. The only true, honest metric of the silver market is the verifiable level of registered, deliverable metal sitting in the COMEX and LBMA vaults. As long as those critical inventories continue to dwindle month after month, the ultimate physical squeeze is mathematically inevitable. The paper market can only suppress the price for as long as there is physical metal to deliver to those who demand it. When the physical vaults run dry, the paper shell game ends violently. Fourth, beware of the new digital illusions being pushed upon you. In 2026, we are seeing a massive, coordinated push by Wall Street towards tokenized assets, digital ledgers, and unbacked exchange-traded funds. Never forget the golden rule of precious metals. If you cannot hold it in your hands, you do not truly own it. In a true systemic global financial crisis, the counterparty risk embedded in paper silver and digital tokens will wipe out millions of unsuspecting investors. Stick to the physical metal. We are living through a profound, terrifying, yet deeply exciting economic transition. The unipolar financial world, completely dominated by the fiat dollar, is fracturing before our very eyes. A multipolar world, heavily backed by raw commodities, tangible energy, and precious metals, is rising aggressively to take its place. The global elites understand this reality perfectly. The massive central banks understand this transition. They are aggressively hoarding physical gold and silver assets at a record-breaking pace, all while looking directly into the camera and telling you, the everyday working citizen, that everything is fine and you should keep your wealth trapped in their decaying digital fiat system. Do not fall for the trick. Do not let the engineered algorithmic price drops shake you out of your rightful position. The critical move right now is unwavering patience. The critical move is unshakable conviction. The critical move is deeply understanding that the fundamental laws of physical supply and demand are absolute, and a 6-year, 762 million ounce global deficit cannot be ignored or papered over forever. Hold the line with everything you have. Protect your family's purchasing power and future prosperity. Trust the physical metal, because history shows us that everything else eventually goes to zero. Thank you for being here with me today in the studio. If you found deep value in this analysis, if this presentation helped clear the thick fog of the mainstream financial media, please hit that like button. It tells the YouTube algorithm that real, fundamental economic truth actually matters to people. Share this video immediately with anyone you know who is holding physical metals and might be feeling the immense psychological pressure of this current market manipulation. Remember, I am John A.G., and this is Aurex. Stay highly vigilant, stay educated, protect your wealth, and I will see you in the next one.